Good morning, traders. My name is Shegun Chatu for 7. I train traders how to trade in harmony with the market. So today's analysis is on the Canadian dollar Japanese yen 1 hour chart. So successful trading is knowing what to do and doing what you know. I'm going to analyze this the way we have been doing it, and also for those that have been watching my videos, I've done some education stuff about this methodology called the Wave of Success methodology. We have an uptrend up to this point. Okay, so the people that are buying here, they were looking for correction, and we can see at the break of this is the last available or permissible low that could continue the trend. Eventually, the market failed to make a higher high above the previous momentum high. Price broke down and confirmed the downtrend. So we draw the waves, and so this becomes an impulse wave up to this point. 5 waves down. Okay, that is 0. This is 1, because remember, all this is still a correction. It became momentum low here. 1, 2, 3, 4 that failed to make a higher high, then 5, it became a momentum low here. Okay, that means the sellers are now, they have overwhelmed the buying pressure. Okay, so let me change the color. Then after a completed wave structure, we expect 3 waves pullback. I've done a video on this simple thing. In an impulse, you expect 5 waves. A corrective wave, secondary trend, you expect 3 waves, and this is 0 ABC 1, 2, 3. Okay, that is intact. Then yesterday we saw the breakdown that said to us the reset is complete, so we can say this is the reset point, and that is where all the buying will come in again if the price gets above there. All right, so we now have a new wave structure starting 0. So a new wave structure started yesterday from here, and we've already seen 1. The 2 gave us a deep correction above the previous structure just to test the structure, okay, and to see if there's any more liquidity around that area without closing above the 0 level, and your target is all the way down. This move here, so if we do this in terms of projection, we can use the Fibonacci for this type of trade because we have a completed wave structure down. So we have 0 all the way to momentum low, and you can see the 50% of the T1 has been traded, so that is acceptable, and this gives us a target that is going to be below the T2, which is the 61.8. This area here will be broken one way or the other as long as the price stays below here. When it will happen, we don't know, but that is the picture in front of us. This is the way we like to look at the market. And that's just a simple analysis for this morning, the 22nd of January 2025. The entry for this wave 2 will come in below this candle here, this breakout candle. This low is 108,614. So I can label that. We've already traded below it, but we haven't closed up below it yet. So that will be your short price point. Six 108,614. And automatically, if we take a shot there, the stop loss will come above here. the high of 0. Can give you some pips there. Let me use text actually. So let's find the high number 109016. Depending on your spread, it shouldn't be more than 0.5. Okay, so I'm gonna use 109.05 as a stop loss. In terms of target, we are targeting below the 61.8 because this is going to give us an extended move. Okay, based on the previous wave structure 1 that is completed, that completes here. So once the price starts to break down, we're going to break the low of 1, and this cannot hold the price at the current setup that we have. Unless the price break above here, then you're not going to take the short. Okay, so that is basically it for this one. If you like what you see, leave a comment and give us a thumbs up. My name is Segun Chatu 47, and I hope to see you in the next video. God bless.